Hello, and welcome to myfinanceteacher.org. Here we are continuing our evaluation of gold royalties and gold streamers. Today we are going to look at WPM, Wheaton precious metals. And of course, as usual, the same factors contribute to our valuation model. Three scenarios for gold price, the royalty ounces, we call it reserves, that the royalty company has, costs of purchasing those streams, royalties, in this case cash costs. We subtract the long-term debt from the valuation, taking into account the time value of money. Look at the per share value, taking into account how much shares is held by the insiders, which might turn out to be strong hands. And all of this data is sourced from the third quarter report for 2020 and Yahoo Finance. So let's start with our three scenarios for gold price. And today, by the way, is 4th of January 2021. In our balance scenario, we're going to have a look at the price of 1882 for gold, which is around 2% below the current spot price right now. The conservative scenario is 10% below that at around 1694, and optimistic scenario is about 10% above the balance scenario at about 2070. As I've been mentioning for several months already, I do expect gold price over the next, say, 2 to 3 years to average far above $2,000. If you do agree with such estimations of possible future gold price, then possibly this optimistic scenario is not really optimistic enough. In either case, these are the three scenarios we're going to look at. Next, let's have a look at the reserves, which are expressed in the gold equivalent ounces. Actually, the company has gold, silver, palladium, and some cobalt. Excluding cobalt, Wheaton has around 18.3 million ounces of gold equivalent of gold, silver, and palladium. And if you check in the third quarter reports, you'll see a slightly larger number, but what I've done to that number is I've subtracted the sales so far in the first 9 months of 2020. Next, looking at the measured and indicated resources, exclusive resources, which do not include proven and probable reserves, those add up to about 11.5 billion ounces of gold equivalent ounces. As you will see in a minute, in our conservative and balanced scenario, we don't actually include any of the measured and indicated resources. So we do try hard to avoid buying overpriced assets. Moving on to the costs of sales, in this case cash costs, they add up to $428 in third quarter of 2020. If you look at the first 9 months of 2020, those cash costs are $424 per ounce of gold equivalent. And there is an argument to be made here that if you really want to have a look at true valuation, you possibly want to add per ounce tax costs here as well, increasing this cost of business a little bit. Next, moving on to long-term debts. Long-term debts, in addition to lease obligations, add up to about $490.5 million. And Wheaton has 499.3 million shares outstanding, with only 0.13% of those shares in insider hands. Discounting the royalty ounces over the average mine life of around 27 years based on 2020 production guidelines involves using a discount rate of 5%. So with all of those reserves, after cash costs per shares and discounted over time, let's have a look at our conservative valuation, where again, reminder, we look at the gold price of only $1,694 and we only include proven and probable reserves here, as if Wheaton didn't have any of the measured and indicated resources or even any of the inferred resources. Let me point out some of the highlights we've had at myfinanceteacher.org so far in October and November. Our Bitcoin gains have been amazing at over 58%. Our investments on oil producers has done and is doing very well, with the gains on different producers ranging anywhere between 30 and 40% just over the last several weeks. And also over the last several weeks, we've been doing relatively well on coffee and some other assets as well. So if you're interested in more frequent and detailed analysis on a range of assets, check us out at myfinanceteacher.org. An interesting product that we have at myfinanceteacher.org is the portfolio, where I track all of the trades that have ever happened, which provides great transparency on all of our gains as well as losses. I would guess that not many other analysts would track their performance with such transparency. With such conservative estimation, our valuation is about $27.2 per share, which is actually quite far below the market price of $41.74. So what I think this shows you is that if precious metals don't perform amazingly well over the next few years, then this would be some sort of an indication for you of the risk levels associated with Wheaton. Next, let's have a look at the balanced scenario where, again, we'll look at the gold price of $1,882, and still we only include the proven and probable reserves in this valuation. All of that gives us a valuation of just $31.33. Again, quite below the market price of $41.74. And finally, what if we look at the optimistic scenario, where we plug in the gold price of $2,070 and we only add half of the measured and indicated resources, never mind any of the inferred resources. So again, even our optimistic scenario is leaning kind of towards that conservative side. So all of this gives us an optimistic valuation of just about $40, which is kind of close enough, just under the market price of $41.74. So is Wheaton overvalued over here? Well, that is something I would like your input on. So share your opinion in the comments. But generally, in my opinion, if precious metals do well over the next 2 to 3 years, and I do expect them to do very well, I think a lot of streamers and royalties, including Wheaton, would generally follow precious metal prices much higher. And finally, let's have a look at the highlights. This is information that I've noticed while looking at the company reports, but which doesn't actually go into the valuations. So based on the highlights, you might adjust my reported valuations according to your opinion. Firstly, the ounces in the ground that we've looked at in this video don't include Wheaton's participation in several development projects. If those turn out to be successful, they might add quite a lot of value to Wheaton. Additionally, as I've mentioned, Wheaton also has some cobalt reserves, and it's a pretty important industrial metal which might help Wheaton share prices to stay elevated. Besides that, Wheaton has sizable investments in a few miners, including First Majestic, Bear Creek, as far as I remember, and possibly a couple of others. And dividing the value of these investments by the number of shares outstanding of Wheaton, it adds half a dollar to around $1 to the valuations I've mentioned above. And lastly, Wheaton pays an annual dividend yield of just over 1.1%, which is not really amazing, but something to consider in this current environment of low interest rates. For now, that's enough for this video. Next, back to you. Let me know in the comments below, what do you think of Wheaton or possibly other gold royalties? Have a nice day and good luck in your trades.